But back to commodities, and Manisha was talking about the surge in crude oil prices. So let's take that forward with Peter McGuire, CEO at XM Australia. Peter, great to have you. Thank you for joining in, and good morning to you, maybe afternoon now, your time. But that's the thing, this big surge that we've seen in oil prices. Clearly, the oil market is looking at geopolitical risk very differently vis-a-vis the equity market. Do you think there was maybe too much of sort of risk premium built in, or was it justified? And where do you see the range, say, for the next couple of weeks?
Well, good morning, Surabhi. Yeah, it's afternoon here, and I tell you what, it's been a dynamic week building on what Manisha mentioned. Friday night was strong as far as NYMEX and Brent, so that was a good sign. It's given up a little bit in Asia trade this morning, but that geopolitical, as your question, the geopolitical risk premium, it's starting to build. You've got Russia's situation, what they're doing with Yemen and trying to get mercenaries into Ukraine. So this is going to be very fascinating how that all, rolls into the big equation as far as risk premium. And I would expect that risk premium will probably build over the rest of this week. We'll just have to wait and see if there's any significant escalation in tensions between these parties. So I think December is going to be a very hot market for crude.
So what's the range? Any numbers on the board? Something you'd like to put out? Rough range, rough guess.
Well, it's got to be more than 75 for Brent. If things, and which wouldn't be surprising if things move up from an escalation standpoint from here, then you'd have to add more dollars to risk premium, Surabhi. So I would think that possibly you're going to be nudging that 80 sort of number for Brent, which is not a good sign for consumers. And WTI more than 75. It was testing 71.50 on Friday night, and it's given up a little bit in Asia trade this morning.
Quick word on whether or not the Aussies have a chance at the WACA?
I knew this question was coming.
Nigel, what a silly question to ask. You know the Aussies are playing home territory, and we're going to give you guys a bit of a start.
I hope, for a closer fight today. But, on Friday morning, Peter, you would be asking me this question, and you would be grinning corner to corner. But I'm feeling quite good today. 4 wickets down, 6 to go. You all have got nearly around 480 runs to get. So wish you all the best, mate.
Well, I've got to stay positive.
Absolutely, absolutely. What about, will you stay positive on steel as well? We saw prices move up, and then off late again, the prices have come down, the Chinese steel prices. What's going on there? The worry is the way China is exporting steel. And we have a strong pitch from the domestic guys here in India who want some kind of protection because they are exporting steel to all parts of the world. What's the range on steel?
Well, this is the question because, from a domestic demand standpoint, China and what we've seen as far as trying to re-stimulate their internal engine and then exporting, well, the world's using as much steel as possible, from building to every form of construction. So where it runs, I think you're going to see, again, volatility play into that whole sector. There's been no real strong breakouts if you're looking across some of those base metals. They've had a little bit of a rally to the upside, but nothing startling. And still iron ore's well back from its highs that we experienced, earlier in 24. So I think you're going to see volatility again for Q1, and it's hard to put a price on, where you're going to see some sort of floor. But I think that it's going to be very much a hot traded commodity, and keep an eye on the steel and iron ore and naturally the other industrial metals.
Right. Peter, any thoughts on the price of gold? Bitcoin is around that landmark 100,000 levels. Gold, of course, has also been doing very well.
Well, exactly, Prashant. I mean, it's had an astounding couple of weeks, and it was sold off after the Trump president's election came under some pressure, and US dollar had a really big rally to the upside. We saw that, and gold took a hit, but moved and it recovered very strongly last week, up 5% as the chart says, as your slide says. So I think there's more upside for gold. Central bank buying, their appetite is incredibly strong. And I feel as though we will test probably all-time highs sometime in December. Keep a close eye again on US dollar index, what's happening as far as ECB and of course the Fed in December, all of these factors. And if you see geopolitics ramp up, then that's going to be, that's really going to put a solid boost onto gold, Prashant.
Yeah, absolutely. I mean, it's taken a bit of a breather today, this morning, the dollar index, but otherwise,
Yeah.
we've been tracking above 107. So, yeah, I need to watch that situation closely. Great chat, Peter. Thank you very much. And may the best team win. I'll end with that. Have a great rest of the day.
Thank you,
Thank you for
Surabhi.
joining
That's
in.
very good.
Thank you.